This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com. Welcome. You are listening to another dose of your daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. Today is May 28th, 2020, and this is show number 43. So, Nick, unemployment numbers on the surface, it looks like the claims are going up, but effectively the claims are going down.
Yeah. So we talked about that last week. I said this would be the more important number to watch. So while you have initial claims at around 2.1 million new claims for this past week, the continuing claims declined, and they went to 21 million from initially around 25 million. So we're starting to see a pretty big, due to percentages there, that's a pretty big drop. And again, we'll start to see more of this. If these states up north could start to open up, and even out west in California, if you could allow these people to open up, you'll see these numbers really decline very, very quickly. Just some people don't want it to happen, I guess.
Yeah, they really, really don't. Well, you talk about social distancing and all that. Well, a lot of people breaking social distancing guidelines in Minneapolis now, huh?
Well, that's a whole different can of worms. I don't know if we should even go into that subject today. But yeah, you're seeing it there, and you're going to start to see it really elsewhere as well. It's going to start, and the people have had enough.
Yeah, for sure, and for good reason, too. The cases are declining, new cases almost everywhere. Hospitalizations are way, way down. I think in New York, they had 55 new hospitalizations the day before yesterday. And like we said, the trend has reversed, just like the trend in unemployment. So the question is, how many people will be wound up when all is said and done on the unemployment lines?
Well, that's really the big question. But one thing you have to look at right now, and I think the market is talking to us a little bit. And yesterday we saw, the markets really have a roller coaster ride. Money is rotating out of a lot of the large cap tech names. And we saw that really happen yesterday quite a bit. And it went into, say, things like financials, which have been laggards. Also, we talked yesterday about the beaten up retail names, Macy's. I never talk about Macy's, and I've been talking about it probably for the last week or so. The stock is now at $7. And just to think about it in perspective, just 5 days ago, stock was under $5. So here it is at, $7.12. You're seeing money go into these beaten up retail stocks. And, these are all encouraging signs. And another stock I'm watching too now, just for guidance, is Caterpillar. Caterpillar is very strong on the charts. So, again, when you start to see these things happen, you see this money rotation go into these certain areas, you have to take notice of it. And, we'll see what we get going forward. Today, I think, the markets are up a little bit today, but the Russell is on the flat side. The Russell 2000 has been a great indicator of strength. It's really been leading the markets today. It's a little bit of a laggard. But after a big advance like it had yesterday, up over 3%, that's understandable. So, again, we'll be watching these charts. Charts tell you everything you need to know. But right now, things are starting to recover.
Yeah. So, and then the question is how much? And I would say when that continuing claims gets down to under 10 million, then we're going to really see the economy kick into high gear, because there's so much money kicking around, which isn't necessarily a good thing, but as a result of the stimulus and all the bailouts, everything else, and they're going to send out more money still.
Yeah, I think they need to put a little crimp in that money line. I think it's getting a little bit overdone with that, because this is not free. Somebody's going to have to pay this down the road. And, whether it's you and I or our children, that remains to be seen. But somebody will pay. There's no free lunch. I know a lot of people out there think that, I remember when President Obama was in office, and I remember watching somebody on TV, and a woman said, "I'm going to go get me some of that Obama money."
Yeah.
There's no free lunch. I mean, eventually there's somebody paying for that. So, we have to go realize that again, money printing, this time around may have been the tool they chose to keep things afloat, but we don't want to see. I don't really want to see any more of it.
Yeah, enough is enough already. But Congress, once they turn on the money spigot, it's really hard to turn it off. And Trump doesn't seem to want to turn it off either.
Well, he doesn't, and if there's my one knock to Trump, it's the amount of debt that we've had. Every president, and Obama was a disaster with the debt. Bush was a disaster with the debt, and Trump is just as much of a disaster with the debt. So we're looking at this, but the reality of it is we've never shut our economy down. And that's something I've never seen in, 20 something years I've been in this business. And I don't think anybody's ever seen it where you just absolutely close the doors of business. That's kind of absurd, a little bit ridiculous, but it did happen. And we should thank all of our great health officials that are running the show for that one. But I mean, if that's not the biggest blunder I've ever seen in the world, I don't know what is.
Yeah, it really history will be written about this one, and now we see that the actual death rates from COVID-19 are not that much higher than ordinary annual influenza toll. So, yeah, a lot of things happening. So, as far as sectors to watch now, Boeing was up. I saw airlines have taken a big step forward, but is this just the beginning?
Yeah, I think right now you actually have a good day for Boeing today, up $5. It talked about that 737 production kicking in again. So we'll see if that's the case. But Boeing right now is holding up pretty well on the charts. And I think this stock probably, has more upside. The airlines, I mean, they had a terrific day yesterday. They were all over the map, though, up and down and all around. They hit a key resistance point yesterday. Today, they're backing off, which is exactly what I like to see. I never want to see things go up in a straight line. So I'd love to see the airlines now just really park themselves on a flat line on the chart for about a week, and then we'll see them take off again. But really, we've had terrific action in the airlines recently. The hotel stocks are, again, on my radar. I'll be watching those closely. Today, they're all pulling back, and that's what I expect. And, again, I'll be watching that pattern pretty closely. Earlier today, I closed out an options trade for about 45% in Unilever. And this is a group I actually still like a lot. All of these consumer goods companies, whether it's Colgate, Unilever, Hershey. Hershey's having a big day. Procter & Gamble's having a big day, up $2.40. So I did sell my call option in Unilever today for about 45%, which is a terrific, trade. I had that for a little over a week. And again, that industry group looks very strong to me. So I see that money rotating out of big cap tech, especially the cloud software names, and they're rolling right up into a lot of these consumer goods plays. A lot of the stocks that were beaten down are really seeing a lot of interest. And that is what sustains a rally, and that's ultimately what you want to see.
So rotation into less favored, less hot, if you will, sectors, that's really an indication that the market advances going into another level.
That's right. And that's the way it works. And, last week also I saw money come out of pharma names. Pharma names were very, very hot. They were really, really strong. Today they're rebounding a bit, but they came down quite a bit. And that's healthy action. When you see stocks go up, they have little minor corrections, little pullbacks, then they can reassert themselves and move higher on the chart. So I actually am very encouraged with everything that I'm seeing in the market today. I don't want to see, a blow away rally again. I'd love to just see a nice pause day. And, stocks that had big moves yesterday, let them digest the gains. And then we'll see where we go from here. But so far, so good. Everything's, you saw it in gold, too. Gold is up nicely today. So if you look at gold today, that's up $11. But, it's been pulling back. And that's what you want to see. Pull back a little bit, go up a little bit. Form that consolidation, and when you do that, there's higher price to come.
Right, and hey, we're looking McDonald's up again, another buck and change per share.
Yeah, McDonald's sitting just under 189 a share. I'm looking for this to go to north of 200. So, and like I said to you yesterday, a close above 190 really gets the squeeze going on McDonald's. So we're getting there. It's working its way through and doing well. I own Coca-Cola as well. I'm in the money nicely on that, and that's another stock I'm up over 4% on at the moment. So, all you see how I was able to really pick out these areas in the market that were underperforming, but I thought would start to perform. And that's what I do with the charts. And again, I had been telling even on this show, over 2 weeks ago, hey, technology looks very top heavy to me here. I wouldn't really get involved, even though the trend is up. And sure enough, money's starting to come out of those big cap tech names and rotating into other places.
So Coca-Cola, is it still a buy?
Oh, I think Coca-Cola's still got a lot more upside. It's one of my favorite charts right now. I think this goes north of 50.
All right, so Coca-Cola, and that's KO on the big board. And yeah, the chart is looking highly positive on that.
Yeah, it's a great chart now. You're above your 20-day, you're above your 50-day moving average. It's put in a nice sideways base for about a month and a week. I love when stocks do that, and they just tell me they want to advance. That's what I look for. I look for those kind of patterns over and over and over again.
Right. So Coca-Cola, and that really plays with McDonald's. So what about the rest of the restaurant group?
Yeah, so I follow pretty much all of the restaurant stocks that are out there. McDonald's was kind of my favorite in the group, but I actually like them all right now. So when I look through the charts here, and some of the stocks that I have been in was Shake Shack. That's a stock that I was in not that long ago. We made tremendous money on. That one still looks like it could go higher. Starbucks is another one. Chart is good on Starbucks. That one looks like it could go higher. Yum Brands, the chart is good there. It looks like it could go higher. So instead of picking, being in all of these names, I just picked the one I like the best, and that was McDonald's. Another big name is Chipotle Grill, but this one is too high on the chart for me. This stock, has basically gone from the March lows of $415 to almost $1,100 a few days ago. So now it's backed off at $9.95 a share, but I wouldn't touch that one just because it's too high on the chart. I'm not saying it can't go higher. It's just the pattern is parabolic. I don't like those patterns. Not that it can't go up more or go up further. It can, but I like the stocks that still have room to run, and that's McDonald's, that's Shake Shack, that's Starbucks, that's Yum Brands. Those are all stocks I think can go higher down the road. Even Darden Restaurants looks good too, but that may need to consolidate a bit more.
All right, so Darden, and they're a big owner of different chains of restaurants, right?
Yeah, Darden owns, the big one they own is Olive Garden, and, they own a bunch of others as well, but Olive Garden is really their household name.
Right, so it's primed to make a move. And what about our oil sector there? It's been a little bouncy as of late.
Yeah, so oil's pulling back, as we talked about. It went up to 34. I was really only thinking it can go to 33, and then we need to consolidate. Now it's at 32.70. And I'll tell you what, it's just going sideways. And you know what happens, Kerry, when I say things go sideways, you know what it's looking to do eventually. It's looking to move higher. So sure. I like everything I'm seeing in crude oil right now. I hope it could just go sideways for 2 or 3 more weeks, and then we'll look at this thing going up into the mid to low 40s. I would think initially that should be your next resistance point. Then it's really $50.
Wow, $50, and nobody out there is calling for $50 oil, Nick, right?
Well, just think about it. On April 20th, when oil went negative by $37, nobody was calling for oil even to get back up to 30. So, here we are. I said we could go to 32, 33, and, here we are at, $33 a barrel. So, it's really contingent on opening up this economy. I took my son yesterday to his baseball practice, which is about 45 minutes away from where I live. And I have to say I was in traffic. And that actually felt good. It felt good to see people getting back out there, getting back to work and sitting in a little traffic.
Yeah, well, we've had huge rainstorms here on the east coast of Florida for the past week, so that's kind of mucked things up a bit, slowed things down. But now it's a nice day, and I see lots of cars out on the road. And again, Florida is obviously reopening faster than many states. Probably by July 4th, I'm thinking in most places, this is all going to be just a memory.
I pray that it is, and I actually believe it will be. What we really need to see is the rest of this country get on board and stop being politicians and start being Americans, and let's get back to work.
Yeah, and really, you just can't hold this economy back till the election. I mean, I just don't see how they can do it.
Well, it seems like that's the agenda. When you look at some of the things that are going on, I mean, there's no reason why New York City is not starting to open up. I mean, I just don't understand that. You got places like Chicago, parts of California. I mean, you got to open up. I mean, it's just not healthy for people to be stuck inside. Now, if you're elderly and you're compromised, hey, just stay isolated. I get it. I understand that. But the reality of it is, America's got to get back to work. Yeah,
and slowly but surely it will. The one thing when we started this podcast is talking about how the large majority is always wrong, and the majority was calling for this thing to last for God knows how long and no economic recovery at all. And it looks like they're going to be wrong.
Well, the thing about it is, right now, I think they're going to be wrong, but we'll watch the charts and we'll let the charts determine it for us. That's what I've done, and I've done that pretty successfully. When we got to March 18th, March 19th, I told all of my members, hey, we're getting long here, and we're going to try to hold on for the ride, and we're going to look at long side plays, and I have not played the downside at all. So it's been the right move, and again, when the charts tell me otherwise, if they tell me otherwise, I have to reverse as a trader and do that. That's what we do as traders. I don't ever want to force any opinion on anyone. I just let the charts tell me what to do.
Yeah, and it seems like better to watch the charts than to listen to the so-called experts. Anytime you see a headline, experts say this or experts surprised or whatever, you got to really be looking through that headline to the true story.
I couldn't agree more, Kerry. And a perfect example of that was options expiration. I mean, we talked about it that week on this program, how many people came out, whether it was David Tepper, Stan Druckenmiller, the Boeing CEO saying the airline's going to go out of business by the fall. I mean, it was doom and gloom. And there were others too. There were a lot of others that were just doom and gloom. And on here, it was hard because we had some sell-offs on the back of that news. And I said, it's options X. This is what happens during options expiration. They're going to shake you out. They're going to shake the tree. They're going to test your will, but I don't see any change in the chart. And, that's what the charts do. They allow you to stay the course.
Hey, and just one other stock I tend to watch a little bit, Toll Brothers. And Toll Brothers had positive earnings yesterday. And the stock has really, from its low, has been on a complete tear. It was down as low as around $14. It's now at $33. I mean, that's pretty remarkable.
And this morning it actually gapped up. But what it did was Toll Brothers has been a major winner, along with all of the home builders. So just think about it. Low interest rates, home builders have been really one of the strongest industry groups. And it pains me to say I did not get on board, even though the patterns were good. I just thought we'd get more of a pullback, and we really never did. But all of the home builders remain very strong. They're a little bit into resistance up here because they've had such a big move. So we'll watch and see if they could pull back or consolidate. But Toll Brothers is a perfect example. And that's a high-end home builder as well. They had really good numbers from what I saw, at least initially. I don't really pay too much attention to the numbers. But the chart has been very, very strong. Today, it gapped up. It opened up around, I believe the high today was around $35.26. But like you said, it's coming off of a low of $13.28 in March. So just a really stellar move to the upside. And you're going up into a lot of resistance here on the chart. So, let's see what it does over the next week or two. But the trend is up in all the home builders right now.
Yeah, and the trend is your friend until it's not, as we like to say. Anyways, Make sure you go over to Nick's site, inthemoneystocks.com. Check out his trading record, a lot of other useful info there to help you become a successful trader. And check out the Twitter feeds at ITMS and at Nick Santiago 01 and ours at Kerry Lutz. And well, that's it for today, Nick. We will pick up where we left off tomorrow, and happy trading.
Thank you.
This concludes another episode of Daily Market Wisdom with Master Trader Nick Santiago. For more information, go to inthemoneystocks.com and see Nick's full trading record, or check out the Twitter feeds at ITMS and at Nick Santiago 01.